Hey fam, welcome back to the channel here at DTI Information Network. In today's video, I want to talk to you guys about what an ideal profile should look like to get approved for personal credit cards and personal loans and personal lines of credit. This is a very important topic because I get it a lot where people are like, hey, I have a high 700 credit score, or I have remarkable credit. And then I look at their credit profile and I notice that it is not designed to get them qualified for the funding that we need to get them. So today I decided to do a video so I can tell you and show you guys exactly what your profile is going to need to look like for you to get funding from the banks. All right. So if you've never been here before, welcome to the channel. Glad to have you. At any time in the video, if you hear something you like, just like the subscribe button, give us a thumbs up, much appreciated. Other than that, we're going to keep it rocking and rolling. All right. So here on this channel, we talk about everything from personal credit, which we're going to talk about today. We talk about everything from business credit, and then also how to use the bank's products like their credit cards so that you can use their reward points to travel for free. How to use their lines of credit and their loans to access capital for you to get cash flowing assets like real estate or even buying your own business. Okay, so in today's video, I'm going to start with how your profile should look. All right, so there's some key factors that your personal profile should look like. The first thing is 100% payment history. I can't stress this enough. You do not want to be late on your payments. Okay, very, very important. Now, I will let you know that over the course of time, that becomes less of a factor, but it takes a while. All right, and getting late payments removed off of your accounts is one of the most challenging things to do. I deal with it all the time. We try to help people out. We let them know up front, but at the same time, we know it's going to be a challenge, especially if that's on an open account, right? So we do our best to stress to you guys not to be late on your payments. Set up some kind of reminder, set up automatic withdrawals. Even if you don't think you might have the income, at least it will set a reminder to you, because they will be like, hey, your payment didn't go through. And then that would be a trigger to hurry up and make that payment, because after that, you have another 20 to 30 days before it's going to report on your credit report. So 100% payment history. All right. Very important. The second one is credit utilization. Now, your credit utilization is your credit overall balance divided by your overall credit limit. Okay. Now that is entail a percentage. So you may hear all the time, hey, you just need to have under a 30% utilization, right? Well, don't listen to that, especially if you're going for funding. Now, what I will tell you about that is that when you go over that 30% utilization, that is when your credit is going to get hit to the max. Okay. When you get it under the 30%, then your credit then it's only going to ding your credit a certain amount. But once you go over that 30%, you're taking all those points right off the table. Now, let me tell you what the ideal credit utilization is. The ideal credit utilization to have on your credit report and for funding is going to be anything under 10%. Now, let me let you know this. You want to have it within 1 to 5% to give you the maximum amount of points that you can get for your credit report, right? If you can ding it all the way down to 0, take it to 0. But 1 to 5 will help the algorithm the most. Under 10%, you're good for getting funding. All right, next part, age. Your overall age of your credit needs to be a minimum of 5 years plus. All right, 5 years plus age. What that means is, let's say you have one credit card and you've had it for 5 years. Well, then you get another credit card. Now you have 2 credit cards, but you just got a brand new credit card. That's going to dropping your average age down to 2.5 years. And that's going to put you under. That's going to make it look like your age isn't mature enough. So credit card or credit lenders are going to see that as a weak profile. Now, let's say you have everything else in place and you have a high credit score. You have a 720 credit score, but the age of your credit is very low, right? Then they're going to start looking at other things. They're going to start looking at how many inquiries you have on your credit report, and we're going to go into that and how that's important. They're going to look at other factors, but when we're talking about running you right through the system, sometimes it's an algorithm, and they're trying to make sure that all these points hit. So you want to make sure you have an average age of 5 years plus. Now, there's ways that you can actually finesse this part of the game, and that is going to be by adding authorized users. We have a whole video about authorized users that you can go and check out inside of our playlist. But adding an authorized user, basically what that is pretty much adding somebody on. You're getting added on to someone else's credit card so that you get to inherit their credit age, right? So if they have age on that particular credit card of say 10 years, now that's going to help your overall age on your credit profile. So that's a way so that you can actually raise your credit age up. Now you're going to want to make sure you have all your other things in order, and we're going to start going into that as well. The next thing you're going to want to make sure you have that I alluded on just a minute ago is your inquiries low. You want to make sure that in a 12-month span, you don't have more than 4 hard inquiries. Now, if you don't know what a hard inquiry it is it's basically when you're going to apply for credit and they run your credit and they see if you qualify. A lot of lenders are going to put an inquiry on your credit profile. Now, that is a hard inquiry. There are something called soft inquiries that do not affect your credit profile. So you're going to want to make sure you distinguish which, if they're going to put a hard inquiry or if they're going to put a soft inquiry on your credit report if they run it. Now, you want to make sure within a 12-month span, you do not have more than 4 of these. That's why it's very important that you strategize how you go for funding when you're going for funding. You want to see, hey, do I have 5 hard inquiries on my credit report? If I do, that could possibly be a red flag to the lender. Now, let's say you have Experian, TransUnion, and Equifax, and one of them you have 0 hard inquiries. Well, that's the one you're going to want to try to run, or that's the bank you're going to want to try to go to. So what I mean by that is, let's say it's a bank like TransUnion, right? And you don't have any hard inquiries on TransUnion. Then that is a bank account. I mean, that's a bank that you're going to want to try to go for lending, because they're only going to pull TransUnion. All right. I hope that hits with you guys. Now, the other part is with hard inquiries, if they are not tied to open accounts, only if they are not tied to open accounts, it is worth disputing them if you're going for funding. Okay, if you're not planning on applying for anything, it's not really worth the headache. Just let them fall off. They'll fall off after 2 years. All right, but if you are getting ready to go for funding for like credit cards and that kind of thing, then it's important that you get these off your credit profile. Now, a lot of times people get these hard inquiries when they're trying to go shop for a vehicle, which is not wise. You want to make sure you get your pre-approvals first, but it happens. And what happens when you're sitting down with the finance guy is they're shopping you around to a bunch of different places. And guess what? You're getting hard inquiries for every single time they shop you. And then some people have had arguments over this with some people in the auto industry. Oh, but it's only going to count for 1 hard inquiry. Yeah, 1 hard inquiry. But it's going to be, if you try to run your credit application through somewhere that is just going to look at the algorithm or just going to be pulling your credit profile, they're going to see 18, you're going to automatically get denied, right? So I don't go by that whole 30 days. I have 18, but it only counts as 1. Yeah, you can probably argue that to an underwriter if you're going for something else. But if you're trying to run an application, it's going to come back denied, and you're going to have to end up facing some other kind of challenges with getting those removed. Now, you can get them removed if they did not grant you credit or they did not give you that particular vehicle that you were looking for. You can get those removed off your credit profile. So at any rate, hard inquiries, keep them under 4, just to keep it short and simple. Now, the next thing is you want to make sure that you have a thick profile. What I mean by that is you want to make sure you have enough accounts reporting that you pay your bills on time. So when an underwriter looks at your credit profile, they don't just see one different vendor saying you pay your bill on time, like one credit card, right? So ideally, you want to have a minimum of 3 revolving accounts. A revolving account, real quick, is just an account when you pay it, you get to use that those funds again. That's revolving. So you get to pay it, you get to use it again, pay it, use it again. That's revolving, to keep it in a nutshell. Installment accounts, you want to have a minimum of 2 installment accounts. An installment account is like a loan. It's like a mortgage loan. It's like an auto payment. It's like a personal